All right. I think we got everybody that, we've waited long enough. So anybody who hasn't joined, they might join partway through. But I
Okay.
want to thank everybody jumping on this call today. So today we're doing a lender Q&A with one of our lenders, Seattle Funding Group. This is Chris. Like I was mentioning earlier to Chris, he's kind of become my catch-all, at least on the West Coast. If you guys check out our lender buckets Excel, if I pull up Chris here, um, you're going to see that, I kind of have him doing case by case on a lot of stuff. And Chris, I think this was before you and I met. I mean, I
Sure.
have somebody who I talked to said you guys will do case by case on a hotel, case by case on standalone restaurants. And I'm wanting to sharpen in a little bit closer on
Mhm.
exactly what your specialty is. But before we get into that, Chris, if you don't mind, kind of just telling us a little bit about yourself, your background, kind of where you laid into SFG, and then your guys' sweet spot, and we kind of go from there.
Yeah, absolutely. So I've been Seattle Funding Group. I'll speak to the company first. And I'll speak to myself. Seattle Funding Group's been around since 1988. One of the few private lenders that's been around that long because they somehow got through the '08 recession, which kudos. But yeah, so we're unlevered fund. When what that means is that we're not calling Wall Street. We're not connected to with any third party firms. It's all investor capital. They get a yield, they get a return, and we have discretion and control to go make loans with that capital. So that's really how we get about. And when it comes to me personally, I've been in here for, gosh, 4 years. Before that, I actually, of all things, I worked in the automotive industry with Enterprise Rental Car. I would wholesale and buy their cars. So I'd work with manufacturers, buy their cars, get rid of them when we were done using them at Enterprise. So completely different industry. But I've known John since 2007. So he gave me an opportunity and I took it because I had 3 kids and I was traveling every week and I
Mhm.
like my kids and I want to stay married. So I took the opportunity to roll with that. I love it. It's a fantastic company, fantastic group, and I see my kids every night. Coach their soccer. So life's better. That's kind of my
That's
background.
that's the best part of private money and mortgage. Loans don't fund on the weekends.
Yeah, I don't have to fly to Detroit anymore. Oh. But anyway, just to speak about really our programs and what we do, the reason why you see case by case study is because we do have discretion, control, and flexibility. We're looking for good deals that make sense. We're not chasing deals. For us, it's sensible lending. We don't want to over leverage ourselves or the borrower, especially you see right now. I think a lot of individuals, if you took too much money, if you borrowed too much money in the previous year or two, you had the capacity to, lenders were doing that. Then right now, as you look to refinance or get out of the loan because it's a short-term loan, you're running into troubles. So right now, we really focus on making sure that we're setting people up to succeed. We're not the long-term debt. We're short-term debt. So we're there to acquire if you need a quick close, or if the parameters of, I mean, candidly, right now, credit unions and banks, if they're not lending, and it's going to be a different scenario in a year or two, we're a great option. Or the property that they're buying doesn't conform to the lending standards of the bank or the other institution, and there's going to be a value add opportunity, and we're there for the bridge to get to that point. Or we very active in construction loans. Our construction loan department's been around since, gosh, the '90s. Jim's been managing that, and everything's done in house. And that's a benefit for a lot of builders who want a simpler, more streamlined process. We're there from the beginning to the end, so we're working with you. Candidly, we have another set of eyes on the project, and if there's any problems or anything comes up with post closing, anything comes up post closing with you guys, but more for you know why people use us, it's because if there's a problem with the draw, if there's a problem with along the way with, let's say, foundation, or it's taking a little bit longer, we're there along the way, so we can actually adjust our loan to fit anything that might happen that's out of the borrower's control, which
Hmm.
is a little bit unusual in this industry.
Hmm. The ground up piece is where we kind of suffer in on the commercial side. Small balance commercial ground up seems to be a very hairy deal for us. Carlos has got something like that. We've kind of looked at. He's in Texas though, and I know you guys have strained away from Texas. But
Yeah.
can you kind of elaborate a little bit on what you're looking for ground up when it comes to like money deals and what's a slam dunk, what's not a slam dunk, what you're looking for on the ground up side.
Ground up size, we're looking for people that have appropriate experience for the project that they're doing. We don't want to be their first, we don't want to be the first date. Let's just say that. And if you are the first date, it's okay. We're just going to adjust our leverage accordingly and make sure that maybe there's someone else on the project, like a super or someone that can help you get that first project done. So, and then we want to make sure that the project makes economic sense. Lately what's been happening is, Canley, we need to make sure that when you're building something, that when you're done building it, are you going to get permanent financing? As banks have come down to 55-60% even on multifamily, you can easily over leverage yourself on a build, have this brand new beautiful townhome project, and you got to bring another million in just to get it refinanced for long-term debt. And that's not a good position to be in. So we're trying to underwrite that up front to make sure that people have a good exit plan, or if they're raising money, they have to call capital in the very beginning to get long-term. So for us, when you're underwriting a construction loan, what matters to me as an underwriter and a lender is I want to make sure, do we have a budget that makes sense? Has it been vetted at all? If not, I'll vet it. That's fine. I'm more than happy to talk to the project. How far along are they on the permitting, the process? Even if it hasn't been approved yet, do they at least have a submission? Do we have at least a conditional approval? So even though maybe their plans aren't approved the way they're written, at least I know what can be done or altered. I'm fine with that. Let's see here. And then as far as financial strength, right now, people matter more than even they did a few years ago. As economic conditions tighten, the strength of a borrower, their credit, their history, really, at least to the board, is substantial. And the reason is because if someone's shown the ability to get through a hard time before, they've shown they have high credit, it matters a lot more now. If people have wavered in the past on payments, walking away from projects, things like that, their behavior is more likely to come up again when problems arise. So
you have a couple of other commercial lenders that we send deals to, like Stabilis Capital, Newbridge. I don't know if you've ever heard of Silver Arch, any of the kind of bigger players, and that's who we like to sit with, the bigger players, just because they've been around for a long time and we know they're not going to leave us. They have kind of more of that standardized process. So a couple of the hangups with like Stabilis and Silver Arch is the due diligence costs that come up front. So what I like to kind of line out, and I'm starting to do this kind of as a new thing for our broker partners, is lay out essentially why would we send the deal to you in comparison to the other guys, and then also lay out the biggest hang up with your firm. I mean, you've been with them for 4 years, so you know where your hangups are, whether that's maybe walking it through the board when we get to the final approval, or maybe that's at the very beginning on that due diligence. So could you line out those two things? Why would we send them to you compared to the nationwide bridge lenders like Newbridge or Stabilize? Or and then also kind of your biggest hang up, which is actually really important. That's probably the most important thing, is to understand the hangups before we start, exploring the deals with you.
Right. And I can't really speak to other lenders as far as their pros and cons. I can only speak to who we are. So that's the best I can do. We're going to be more, especially if you have a deal in Washington, California, Arizona, we have boots on the ground. We have local people there. Our offices are there. So we are very nimble and able to adjust to very local market conditions that a lot of nationwide lenders will miss out on. So if you have the right property, the right location, we can see that at a local level at a high rate. So I'm more than willing to increase my leverage to adjust for that because I have inside knowledge. So a great example is Mercer Island. You can be on the right side or the wrong side of the island, the right view, that part of the street. We know that. So depending on geographically where you're sending us a deal, we can have quite the advantage. Same time, same reason we go to Texas is we would have a disadvantage. So it's geographically specific. Like I mentioned before, we're an unleveraged fund. So what that means is if someone comes to an extension and they can't quite, let's say they're trying to get an SBA loan, it's taking longer and they need an extension on the loan they have with us to achieve that goal. Well, we have discretionary control. I don't have to call someone else to get the approval to get the extension. Right now, a lot of loans are being called because a lot of lenders need to get to cash. We don't have that problem. We'd like to get to more cash so I can make more loans, but reality, I just do an extension and we're fine.
So you guys hold all the paper.
We hold all the paper. So
That's good.
That didn't matter as much when everything was going great.
Hmm.
It matters a lot when things aren't going great and people
Yep.
need flexibility and they need extensions. They need a lender that will work with them. Well, if I went to a lender that sold the paper, well, that lender, even though they may want to help that person out, they can't. It's not their choice. So
Right.
that is the advantage of us. And a lot of the advantages we have are post-closing advantages that you may not see as a broker, but your customer will see, especially if they come back to you for another deal later and you can talk about the experience. My everyone down this, you can't see my our office here, but right down there, I can talk to my fund manager, I can talk to the president of the company, I can talk to my loan closer, I can talk to the people who service the loans. So if there's any problem with payments, you can call me. I just walk down, we talk to them. It's a small company.
Yep.
So you get the benefit of a small company that's been around for a long time for that more hands-on service when things don't go well.
No, that actually is really important. A lot of our lenders are big and clunky.
Yeah.
Like Lima One, for example, and I'll name drop because these are lenders we've worked with in the past, and they're staples, but they can be big and clunky because they're selling notes, and there's bureaucracies attached to it. So I'm right there with you. I work with Velocity Mortgage, and we're just super transparent. I'm able to talk to the top of the company with no question, even though we're big. So
Yeah.
it's good. It's good to hear that you have that. Now, what's your hang up, man? Where do you normally get hung up on projects or deals?
Sometimes I will say because we tend to be a more, I don't want to say conservative company because conservative can come across as being not willing to do loans. I mean, we're in the dynamic capital market, so we're not like a bank by any means. But we really want to make sure that we're making the right loan decision, not only for our investors, but for the people we're doing loans with. So many times, if you have a client who's trying to maximize their leverage position, we're not going to be the person that's going to push that leverage to a point that we believe is uncomfortable and not right. And we may not see eye to eye with our mutual customer and or mutual client. And sometimes that is frustrating because I've lost deals over 5% LTV. But at the end of the day, we make decisions that we believe are the best interest. Because again, we're holding all the paper, like we mentioned before. It's a loan that we have within the fund, and we will make sure that it's appropriate for all sides. We do, because the president, the fund manager, myself, when we get a loan, we go through everything. So we go through it with a fine tooth comb to make sure that, like even on recently on a light industrial building up in Everett, Washington. You guys may not know it, just think Boeing, right? Big industrial area. We're performing a loan and we're going to require the roof. We increase the loan size, but we're holding back funds to get the roof repaired because we're very active in making sure that the loans that we're doing are also on properties that are in good condition. If they're not, we'll help you get it there, but we do have a little bit higher requirements. We're looking at the loans a little bit closer than maybe some other private lenders that are more just pushing paper.
Gotcha. Well, let's talk about your product real quick.
Yeah.
I'm sure you have a couple of products here because I know we're doing regular bridge and then we're also doing rehab as well as ground up. So there's a few aspects here, but
Yeah.
can you explain real quick your product? Like, is there interest reserve,
Sure.
for example, and maybe some other aspects to your product that our guys can kind of absorb and start kind of deeper questioning you on?
Yeah, well, we can actually adjust. If you go to our website, you'll see I'll speak to the pay rate shortly. You'll see on the top right, get your pay rate now. But I'll say we can design loans really to fit what the customer may need because, again, we have discretionary control over funds. So I can create an interest reserve. Sorry. Sorry about that. I forgot to turn my phone on silent.
It's all good.
So I can create an interest reserve for the total term of the loan for 6 months of the loan. We can do a pay rate program, which is essentially a negative AM. You can think of it like that. So that works really well for people who have a rehab project, or right now, let's say it's not currently the lease rate isn't where it needs to be, and you're going to need to take some time to renew the leases. So we can have a pay rate of 6.9. The note rate will still be 9.9, let's say, but that 3% accrues and gets settled at payoff. So it can keep your payments down while you're keep more cash in your pocket to make those improvements. That's been a very popular one, especially for with let's just say with different policies where people weren't making rent payments for a
Hmm.
while in multifamily due to COVID. So it was very popular at that time as they were getting their balance sheets right. Let's see here, other programs that we have.
Just program ticks that you think would be good for us to know. Um,
We have ultimate creative design over the loans, even when it came to I will say speak to this. We had a loan that was 3.7. It was the same warehouse, 3.7, roof's $450,000 to repair. So we increased the loan to 4 million and are holding back 450 for the roof. So even though they have to bring $150,000 to close, we're giving them $300,000 towards the roof to be repaired because we're both benefiting from that happening. We get a better product.
right.
So just I would say that being having complete control over the funds, being able to work through creative solutions, we can come up with a lot of different ways through cross collateralization in order to help bridge a small gap if we're slightly off. We can do pay rates, we can do partial payments. Let's see here. We can, if there's rehab that really needs to be done, we're more than willing to work with them to make sure that improves the property. Because again, we both get a better product. It's mutually beneficial. Let's see here. We don't mind people taking seller carrybacks behind us.
Yeah, how
Site
far up
acquisition
do you go
behind
on a
us.
seller carry? Because I got a note right now that we're working on. It's not in your neck of the woods, but what's your seller combined loan to value?
I like to see we like to see at least 10% of commitment.
Yeah, 90%. That's actually really good.
Yeah. So LTC, I always say is like say loan to cost. I say it's your commitment to the project. So we want to see
Yeah.
10% commitment.
Okay, gotcha.
Yeah.
Now looking at this map right here, I know these are your, your home teams, your plays, but I mean, I've
Yeah.
approached you guys on Texas and you guys said, yeah, we will play in Texas. I know right now you might not be, but are there
Yeah.
any other states on this look that you'll still touch on a case by case?
I will tell you if you get something in Dallas, Austin, maybe San Antonio, give me a call. I have done loans in Dallas. I have done loans in Austin. I'm fine with those two cities. Houston's just no offense to anyone from Houston, but I can't figure Houston out. There's no planning, there's nothing. I can't get my hands around it.
Yeah,
Um,
yeah.
but yeah, those are the states we're very active in. I will say Hawaii is an area if you can get a presence in Hawaii, you could be very successful. Not a lot of private lenders go to Hawaii. It is a mortgagee state, not a deed of trust state. So that's why people stay away. But
Yeah.
we
A lot of
know,
leaseholds in Hawaii.
yeah, we have a lot of experience in Hawaii. We do a lot of construction there, a lot of bridge loans there. So we have no problem with it. Um, so if you have anyone that wants to test the market out, do a little marketing out there, it might be mutually beneficial. We also
What about rurality in Hawaii? Because Hawaii is actually quite a rural state, believe it or not.
right. Yeah, it is. Again, it's site-specific location. We've done a lot of construction even on the north side of Hawaii, the Big Island. That's pretty darn rural. But it's been a lot of development up there. I've done Kauai down in Poipu. That's not too rural. Really anywhere on the island of Maui is fine. I maybe I mean, yeah, we're pretty open Hawaii. We know where we want to go, where we don't want to go. So if any of your brokers have a question like, hey, what do you think about this site specific location? I can tell you in 20 seconds
Got
whether
it.
it's something we'd be
Yep.
interested or not.
I got it. I'm the same way. I have to have some sales comps is really what we're looking for.
Yeah.
Um, I don't know if it's the same thing for you guys.
Um, I mean, yeah, but I think it's just, I mean, candidly, I've been to the island probably 50 times. So have anyone on here in this office. So we just have a good grasp of it. If
Got it.
you give us a project, you give us a location, we're going to know whether we like it or not pretty quick.
Got it. And your minimum loan amount still 500, Chris?
Yep, it's 500,000. I'll go below 500,000. Just know the cost to funds will be a little bit higher because our loan minimum fee is $10,000. So you'll see the 2% on there. Um, that's why it's $500,000 minimum. I can do a $400,000 loan, but it'll be $10,000, which will be slightly more than 2 points, but that may be worth the cost to
Hmm.
someone that needs to get that. just needs a quick solution. And I've done that
Gotcha.
before many times.
All right, I'm going to open up the floor for anybody else who wants to ask questions. If anybody else has any input, I know we have other people that aren't just showing visually here. So if
Awesome.
anybody wants to chime in, this is kind of like your opportunity to pick Chris's brain kind of while we got him on this lender Q&A. Anybody have any scenarios that working on right now that could fit the West Coast mold on a bridge?
I'm active in Dallas, so no.
You're in Dallas too? That's okay.
I'm active in Dallas. You said Carlos is in Dallas?
If anything comes in
Well,
Dallas, please, you feel free to shoot me an email or give me a call. I'd be happy to talk through something. The only reason we step more away from Texas is because every conversation I feel like I had in Texas was not, it was pretty rural, pretty out there. Amarillo, somewhere in between El Paso. It's just, those are the areas we're not going. If it's Dallas and it's urban, more than happy to talk through.
Okay.
Right.
And you said you're active in multifamily
Yes.
environment as well?
Yes, so we're active in multifamily, light industrial, even not so much office unless I can see a multi-use for the office and it's more suite style, small, not too large. We do some specific use is fine. We've done, if you go through our deal gallery, which I encourage you to, you'll see examples of loans that we're recently funding, which will give you more of an idea and a picture of what we do. But we've done self-service hotels if there's, under $10 million, multifamily. I did a winery recently, which was a little different, but we did it. We've done gas stations.
Was that near Redmond?
No, it was over in Chelan.
Chelan. Oh, wow. Winery in Chelan.
Yeah, so I say we do go. So again, when I say urban, rural can be okay as long as there's something about the area that makes it site specifically unique to where there's some value there, inherent value in the location.
Right. No, that makes sense. All right. I put Chris's contact information in the chat, everybody. So if you want to reach out to him, it's probably best if you had a scenario first and then bring that scenario to him and just kind of introduce yourself. Chris, a lot of my brokers are either brand new or they've been in the business for a couple of years. They're kind of struggling. They're trying to get more business always. So are you an originator or are you strictly getting business from other brokers like us?
I do it. I'm kind of a jack of all trades. I do everything. I go get loans. I underwrite the loans. I do the approval process. I manage loans. So really, if you have any questions or come give me, what I will say is just be loud, be aggressive. And then, because right now, as you guys know, loan originations are way down. However,
residential,
I will say that as long as you stay in there, the more people get out of the business, the people that shouldn't have really been the part-timers, and there'll be more opportunities for you, especially when it comes back up, because you'll be left standing.
Absolutely.
And everyone will be gone. And that's usually when people really make hay.
Yep.
There's less options for people to go to. However, I will say one thing, there's a lot of short-term capital debt coming back onto the market from short-term lenders that don't have a home. And right now they're being put together through small extensions, trying to buy time. Something has to happen. An action has to take place, whether it's a sell or whether it's a major refinance, whether people have to bring partners in and kind of restructure the whole deal, but it's coming. So there will be opportunities. It's just not going to be your conventional commercial building someone wants to sell it and there's a great opportunity. It's not going to be as simple. However, I think you're going to see a lot of things coming onto the market because it has to come on the market.
Yep. We've actually seen a lot of those for sure already. So maturing notes that aren't able to get refinanced into the perm loan. The exit strategy is falling apart, so they got to jump to another bridge. We're seeing a lot of that.
Absolutely. So
but
I would encourage, even if you want to talk to maybe other private lenders who still hold these notes and they're trying to find homes, talk to them like, hey, what do you have? I've told a few brokers, like, give them a call. What do you have coming due that you don't see a problem? Maybe you can find some buyers, find opportunities.
Yep. This is a major point, guys, because most private money lenders, they have a suite of investors. These are kind of like funds, and each investor might invest in a few notes kind of thing. Sometimes they work like that. and they need to get their investors' money back because they tell them there's a hold period of 12 months or 24 months.
Yeah.
And once that whole period's over, they have to get that person the money, and they don't want to have to go into the foreclosure. It just holds that money even longer. So selling unperforming notes or notes that are maturing is kind of important if there's no exit taking place as planned. So what Chris is saying is totally true. So if you're not hitting up some hard money lenders, local bridge money lenders for this kind of thing, I mean, this is where you could come in. You could pitch Chris's product as an exit to the possibly as an exit, maybe just roll them into another bridge. I mean, are you guys willing to do a rate and term bridge as kind of like an extension almost on someone who's maturing on an existing bridge, Chris, or is that a no play?
Yeah, I can do rate and term. It's only gonna be 1 to 2 years, right? I'm not gonna be the long-term debt, but it's gonna buy him time. And it can be interest. Buy time, give you interest only. I won't believe. Well, we'll see. Jerome Powell, Mayor, who knows what they're going to do, but maybe the market becomes more normalized in a year or two, and we're just bridging ourselves to a better rate environment. And get a lot of that.
Absolutely.
Will you go to? Sorry.
No, go ahead.
Will you go to St. Pete, Florida?
Ah, gosh, I wish. I love Florida, but no, we don't get out there. We're West Coast only.
Okay.
Yeah. And then gosh, I was gonna be remiss if I didn't mention shoot, I'm sorry. I'll email you guys. I can't believe I completely forgot.
That's fine. Send me an email, Chris, after we get off this phone with basically maybe like an onboarding email that you normally send a brand new broker. Because then what we're going to do is I'm going to send that out to the master class so everybody can kind of line up with you as desired. And then we have our internal LOs that want to know, how do I send a deal to you kind of thing? What are you looking for primarily? And we have our standard submission package, but every lender's different on how they review scenarios. So
excellent. I will speak to this quickly. I highly encourage people to just give me a quick call. And I know that may be a little untraditional from what a lot of lenders say. I want to see all this paperwork before I even look at it. No, I'm not that way. I'm the opposite. I want a quick conversation. The reason is I can get to a quick answer and save you a lot of time, save your client a lot of time if you just pick up the phone and call me or send me an email, because I'm more than happy to talk through a deal and let you know where we stand. Because we can hammer out where we maybe will go with it very early, then we know what to ask for and we can get directions. But the last thing I would want you to do is spend 48 hours trying to collect all this information on an email that I send you. You finally get it, you send to me, and it was never going to be a deal because something I could have told you in 2 minutes. Or, hey, this is awesome. This is actually what I need in order to properly underwrite the deal, and this will get us a higher rate of success if we do this.
Right. And, Chris is hitting on a really good point. He can get through that scenario quickly, and it actually allows him to train you up on the product as well. So you don't really learn by a quick email, the back and forth on an email. You learn yes or no. But when you hop on the phone with Chris, he'll refine what you might want to look for as well and what to place in his hands. So, it's more than just the qualifier. It's also kind of honing in sharpening your blade with Chris. So those conversations, super valuable. Right, Chris?
Yep.
All right. Well, appreciate it, brother. Let me know if you have any questions for me. Like I said, I'm going to put you in. And, you'll be going on the platform where there are a lot of other commercial loan brokers kind of wanting a home for these bridge deals. So, yeah, man, I appreciate your time. I really do.
Yep. Thank you for the conversation, and good luck out there, everyone.
Yes, sir.
Go Dogs.
God bless you, Chris. Thank you, everybody. Take care.